It's Sunday, November 29th. Welcome to a new episode of Bazaar. I'm your host, Sid, and joining me in the studio today is Shankesh Jain, all the way from Coimbatore, who is a very good friend of mine and also a banker by profession. Sankesh, welcome to the show. It's great to have you.
Thank you, sir. Thank you.
All right. So, this week we'll talk about Lakshmi Vilas Bank, which is yet another Indian bank finding itself in deep trouble. And if you're a depositor in Lakshmi Vilas Bank, you can now withdraw your money, which was previously, like before a week back, it was under moratorium, but effective from 27th November, you can withdraw your money without any limits. But again, it's yet another bank which has bitten the dust, and we'll talk about the merger deal with DBS India and what it means for the shareholders and for the customers of Lakshmi Vilas Bank going forward. But first, let's take a deeper dive into the history of Lakshmi Vilas. For people living up north in Delhi, Bombay, this is a name we've not really heard. Lakshmi Vilas it's mostly a bank which is it has its presence in South India and Tamil Nadu, and I think the core geographical area is Tamil Nadu, isn't it?
Yeah, right, sir. The bank had started its operations in Tamil Nadu and has been in running successfully in Tamil Nadu for the past 1990 plus years. But it did try to expand somewhere around 1980s and 1995 is when the liberalization scheme was announced. But yet it had its core functioning restricted to Tamil Nadu.
Hmm. And I understand that this bank has been in business for almost a century now. Like you told me, around 93, 94 years. So it's been in business and it has been doing pretty well. But my question is, what changed in the past decade or so? Like the company now has somewhere like a gross NPA of around 25%, and its bottom line has been in the red for quite a few years now. So when did things go wrong for Lakshmi Vilas?
Lakshmi Vilas Bank, like all small banks, right? It has been its business with small retail bank functioning as such. But what's specific to LVB is that in after the global financial crisis, LVB saw that it could have a good stake in the corporate financing also. It started with the Ranbaxy Laboratories. The owners of Ranbaxy Laboratories, Malvinder Mohan Singh and his sibling Shivinder Mohan Singh, right? So they approached LVB for funding for their new concern, that is a Fortis concern, and that took a dip somewhere around 2015. Why? Because Ranbaxy Laboratories also got into tussle in US FDAs, and both these siblings were unable to pay the debt, right? So this was just one tip in LVB's books. And coming to the NPAs, if you were seeing the NPAs, the NPAs of LVB is somewhere around 25% in 2020, what we are seeing. But the book deterioration started right early in 2017 onwards. And for shareholders of LVB who are following their annual reports regularly, you could see that year on year, the auditors have been insisting on this issue, saying that this amount was somewhere around 750 crores, and 750 crores is not being taken back from those businessmen. And their refusal to pay comes with a stick that they are even withdrawing their fixed deposits against which these loans were typically taken. Though both of these brothers are economic offenders wing as on date, still Lakshmi Vilas Bank just couldn't get back on its feet. And one thing that 750 crores sounds a small amount, right? In case of a banking, because
Yeah.
Vijay Mallya's loan was like 8,000 crores, Nirav Modi 12,000 or 13,000. So the interesting part is why LVB couldn't sustain a 750 crore loss, right? So that's typically a good question to come across. But if you see the LVB's books, right, in 2018, it was 20,000 crores. In 2019, it has fallen down to 12,000 crores. So for a 12,000 crore book capacity, 750 crores did matter to it.
And you were like, before we were talking, like when we were researching for the show, you also told me that LVB had entered the PCA framework in 2019, September 2019. So what does that mean? Like, what happens when a bank enters in a PCA regulated environment? How does that affect the business?
Yeah. The right to understand PCA framework, we need to get back to Raghuram Rajan, right? So in 2014, in the earlys of 2014, Raghuram Rajan sensed that banks have been sitting on a lot of NPAs, right? And but the problem with these NPAs is that they have hidden NPAs. So he launched a peer review, that is a compulsory audit review for all the loans books that they are having. And without any caution, these loans were to be classified as NPA. In the early 2015, right, when Raghuram Rajan was taking up the review of all the loans, right, this was not just concerning the PSBs, even the private banks were asked to take a look at their books and the cases that they were having, the corporates and the MSME debts all together. One of the possible things that before Rajan initiated this review was whenever an account was going to be an NPA or say a PNPA, that is a potential net NPA, they would restructure the loans and then it would be good. So it's just like a Ganga Snan which you have. So the books, yeah. So the loans were having repeated Ganga Snans before 2014, but Rajan saw to it that without restructuring, are these NPAs? And if the answer is yes, then just classify it as NPA. Now, when this was happening, LVB saw that being a 20k crore book bank, it did had taken its blow right early in 2016 and 17 when it classified, say the Fortis, say the Ranbaxy laboratories, also and the Religar investments.
Hmm.
But one of the most important things is that when any bank, right, irrespective of a private sector bank or a public sector bank, when its capital adequacy ratio is very less, and RBI senses that, right, RBI always monitors every bank all the time. So when RBI senses that the depositors' interest are beginning to hurt, the management is not perverse taking actions against the bad lenders, then RBI initiates a recovery called preventive corrective action. That is a PCA framework. And what happens in a PCA framework is similar to, say, a substitute player, right? If, let's suppose, in cricket, one of the players is not playing well, what you do is that you make him a substitute player. You let him play the Ranji matches, or you give him behind the nets. You tell him to correct his course of action, what he is doing well. So similarly, in banks, uh, in course of preventive correction action, the bank is placed with very strict regulations, right? You cannot expand your books. Every recruitment of your employees will be monitored by the RBI. You have to constantly report to the RBI and what you're doing and what you're not doing. You cannot pay up dividends to the shareholders. It's like recovering an almost a dead patient. Yeah, that's the correct analogy for this. RBI had placed 11 private sector, like PSBs, that the public sector banks, in preventive corrective action, and two of the other banks that found its way to PCA was LVB and Yes Bank, right? So we have already seen what Yes Bank had been through, and LVB was like, it was not a surprise at all for people who have been following these things. So it had to see its day one time.
I got it. So when you are included in a PCA framework, what that basically means is that limits a bank from expanding, and it's a clear indicator that things are pretty bad at the bank. And so that's okay. I mean, we know that people who are following this, they knew that Lakshmi Vilas was in trouble, and this 25% NPA is just a clear indicator that the things were not good at the bank. But about the merger, let's talk about the merger as well. Like, before the DBS India merger deal that was just announced by RBI, I think two weeks back, there were quite a few suitors for the bank, like India Bulls Housing Finance. I think around 2018 it was in talks to acquire the bank, but then I think the deal never went through. Then after India Bulls Housing, I think Clicks Capital was in talks to buy the bank. Then at some stage, I think even PNB and Kotak Mahindra Bank were being considered as potential candidates. So Why did those deals never materialize? Like, what happened?
One of the things about like finding a suitor for your bank is rest obviously with the dad, right? You know, here the dad is the Reserve Bank of India, right? When it comes to Lakshmi Vilas Bank specifically, right? LVB is almost a very small bank. I mean, it's as much as Reliance taking over Urban Ladder from Bangalore. So every bank could have found itself taking over LVB, but RBI was adamant with the way it wanted to move forward. Before India Housing Bills, we had Indostar Capital Finance, which was ready to. It had an Everstern Capital company which wanted to have stakes in LVB, but the shareholders didn't allow. Now, this is a very interesting scenario. Why? Because shareholders were one of the major cause why LVB is taken over by DBS as on date. Now we'll come to that at a later part, but now focusing on the question that you have asked, what about other suitors, right? So after Indostar Capital, we had this one very interesting person, the Housing Bulls. Housing Bulls, actually, the shareholders went through it. Now, one of the interesting parts here is that Housing Bulls had a stake of almost 5% in, say, LVBs, right? India Housing Bulls, when it went through LVB's board, LVB shareholders meeting, also the RBI outright rejected the deal. The reasons for the rejection was not notified. And similarly, Kotak and Punjab National Bank, if you're saying these deals never materialized as they were very the valuation that LVB was giving and the valuation that these suitors were giving were really not suiting each other, right?
Hmm.
And regarding clicks, when it came after India Housing Bulls, we never got to hear anything after that because there was a sudden announcement of DBS taking over LVB.
So this is what I'm curious about. Okay, LVB is a bank with a gross NPA of 25%. Why would a big short bank from Singapore be interested in such a bank? Not only that, they'll also need to pump considerable amount of money to revamp the operations and to bring the loan book back into shape. So, you know, it's already out there, but DBS India is buying a controlling stake in LVB, and the merger is already effective from 27th of November 2020. So, what do you make of the deal? And how does it make sense for DBS India to buy LVB? Like, is there any potential synergies that could result from this merger, according to you?
Uh, Regarding DBS, right now, this is one of the most interesting things to look forward. Right? Why DBS? It's an obvious question. While you have this Atmanirbhar fiasco going on, saying that we'll be Indians, and now you're handing over one of the major part to a foreign bank. But what needs to be seen here specifically is the Development Bank of Singapore, right? What DBS is a bank established by the government of Singapore, and this bank is has seen its 50 years of successful running. It's one of the most successful bank in Southeast Asia as a whole. Now, we're coming to the India story, right? RBI had always maintained this with the foreign banks, saying that if you are having a localized bank in India, that is, if a bank you're setting up in India is being headquartered and if it is registered in India, then we are going to favor you than other local banks, right? So the government of Singapore, through this Development Bank of Singapore Limited, when it came into India, it set up a local bank. So DBS is a local bank. It is a 100% wholly owned subsidiary, but as it is registered in India. Now, what is more important here is that this is only the second wholly owned subsidiary, right, after the Bank of Mauritius. So DBS being in India, being regulated by the Banking Regulation Act as well as the Companies Act, where the Banking Regulation Act overrides the Companies Act as such, RBI was more than willing to see this bank as one of its own, right? That is one of the main reasons why RBI saw DBS as a potential suitor. And coming to DBS portion, right? Now, if you see the DBS annual reports, the recent annual reports, in 2019, DBS book was around 18K crore, right? And in 2020, it had increased to 19K crore. This is with how many? 33 branches across the states in India, and it is having most of its operations in digital mode. Now, when LVB as a bank is coming to it, and when you see LVB's books, LVB is a very small book, right? Leave that 25 percentage of bad debt, but that 25 percentage of a 12K crore loan company is nothing to a company which has its huge stakes in Singapore as such. For DBS, this was a platter in the sense shareholders gave the platter to RBI, and RBI had just served this platter to DBS, which it took out exactly as it came along. Only thing is that DBS succeeded in convincing RBI that it will be taking over only the assets and liabilities and not the equity. Right, so that's what its benefit for DBS as such.
Yeah, because like you're talking about the equity here from the date of the merger, all the branches of LVB will function as branches of DBS India. And what this means is that if you're a depositor or a borrower, you need to check the rate of interest again on your deposits and your loans, because DBS might change a lot of things and probably do a complete overhaul of the bank. And so if you're a customer, keep an eye on that, just check the interest rate, and probably if you're not satisfied, just you could take a decision. But like you mentioned, from a shareholder's point of view, trading was suspended from 26th November 2020. And also, as per the deal, the equity share capital of existing shareholders would be completely written off. That, which means that if you're a shareholder in LVB, you'll get nothing. It's done. Like you get zero value out of the shares of the shares that you hold of LVB, which is, it does not make sense, because like that's, I think that's detrimental to the shareholders in some sense. And I think there is some case going on, and Madras High Court has passed some sort of an order, like to give some relief to the shareholders of Lakshmi Vilas Bank. But again, this deal, just it's a win for, it's a big win, I think, for DBS India, because I also remember you telling me that DBS is an amazing service provider. Like you told me, you could open a bank account in DBS within 15 minutes. Like if I'm not wrong.
Yeah, so that's one specific thing which I had witnessed it myself. My Digibank account, right? That is again one of the branches of DBS Bank, was open in less than say 10 to 15 minutes. That took the time. But coming to the shareholder point of view, right? One of the most important questions that people are raising is that isn't it detrimental to shareholders? Like, why should the shareholders suffer? Now, given this is the basic fundamental principle of any investing, that as an equity shareholder, you are the last resort. You are going to take the last bread out of the crumb. I mean, the last crumb out of the bread, however you're going to put it. But why was this chosen by RBI? Like, because there is no precedent to it. If you are seeing the past mergers, let's suppose say Centurion Bank's merger with the ICICI, like the Bank of Rajasthan's merger with ICICI, then you have the Global Trust Bank, which had also a merger. At every point, these mergers were in effect keeping the shareholders' interest. That is, the shareholders were given more or less equity shares in the amalgamated company as such. But why not LVB? The interesting part here to note is that the LVB shareholders managed a coup in September. Right now, that's something which did irate RBI as such. The RBI had been invoking repeated regulations over LVB, saying that see, this is a bank which is not being run properly. The management is not up to the task of what a banker should do. And for the past 5 6 years, RBI has been hand on in LVB, giving it so many chances internally to regulate itself. And if you are seeing LVB from a management point of view, uh, for the past 7 or 8 years, no chairman except one has completed its full term with LVB.
Hmm.
And in September, right, coming September 2020, seven directors, right, they were ousted by the shareholders from LVB. This also included the chairman who was sitting and also the statutory auditors of LVB. So this is something which RBI was like couldn't take anymore. It was like, if there is management as such, and if you're not able to appoint proper people on board, then I need to take a bigger hand, because RBI, as rightly said, has a bigger power by Banking Regulation Act, and the extraordinary powers also make it easy for RBI to take over the bank's management where it finds that it's being not run properly. And I think that's one of the major reasons when DPS proposed to RBI, right, under its clause 7, I think so, of the Gazette notification, where it specifically states that every share capital, including the reserves and surplus, will be written off before the amalgamation, and that's a Gazette notification, and RBI was willing to give hand on gloves to the DBS. I think that's an RBI stake.
Definitely, RBI has a lot of power, and it can regulate the banks any way they want to. So I mean, the shareholders are obviously not happy, but I mean, if you are a logical shareholder, you probably would have sold your shares well before 26th November 2020, before the trading actually got suspended. And probably if you just did a little bit of research, you probably would have never invested in LVB. Like, even 3 or 4 years back, the cracks were there for everyone to see. So it's I think most people who lost money were the ones who traded in LVB. And I remember you telling me just before the trading was suspended, like 3 or 4 days back, there was some major buying, crazy buying that happened, like 29 lakh shares. I think that was the volume, right? 29 lakh
Yeah,
shares.
yeah, 28 lakh shares and the bid price was 7.65. And one of the most crazy things about this set is that I being in a tier 2 city, right? So I had pretty much two or three people coming up to me and asking LVB's price is 52-week low. Like, can we invest in LVB? And that's right. And I think it's proper also, like, because now you're seeing the company from a speculative point of view, and from a speculative point of view, it's like it's your call. You lose the entire amount. You win a big stake. But going for LVB, when you know that it is being taken over by DBS, it's all over the news, and still buying it like 28 lakh shares, so 7.6 for this comes somewhere around 2.5 crores. Now that's an investment. I am like visibly not sure who could have done this thing.
You cannot call that, we cannot term it as an investment. That's basically you gambling with your money. That's how
Yeah, exactly.
I would say, because obviously, like, it's all in the news. That probably, like, the news of trading suspension, I think, was not there before. Like, it was only released around 25th of November. So people who bought 23rd or 24th, they were not aware that trading would be suspended. But even after that, that you're not going to get anything. DBS is not going to give you any shares. Even then, if you're
Yeah.
buying, then, my friend, you are in trouble. Then I find it hilarious that people were still buying LVB so close to the
And that's Indian market, right? And this is not new. It has happened all the time, right? Even with Yes Bank, you can find the buy dips when Yes Bank was right out of moratorium. There was a crazy buy run for Yes Bank also.
I remember Yes Bank hitting a low of around 5 rupees, and people were still buying it. I mean, and they made a lot of money. It's not that people did not make money, but it's just how the Indian markets are very speculative. Like, how much ever we want to talk about fundamentals, but a lot of stuff that is happening is because of speculation. We will not go deeper into it, because that might
Yeah, you cut the portion, that will be fine.
yeah, yeah. So that's what it is. And so we also wanted to cover something about the depositors. Like, we've seen with PMC Bank, and we've also seen with Yes Bank, like, the moratorium, and how there's a limit on your withdrawal. Like, with LVB, it was 25,000. So, you know no one thinks before, putting their money in a bank. Like, even when I put my money in a bank, when I choose my bank, I don't do any sort of research. But after seeing all these banking tragedies that are happening, I think it's I think necessary to do your research before you put your hard earned money into a bank.
It is like because the amount of deposits that you're making is again you are giving your money to somebody else. Now, since in India we have never seen a bank run, right? So every Indian is somewhat say satisfied that his money is safe with any bank. Now that's in part very true because RBI functioning on the banks is very much good and like what it has been proven in the past. The problem is that it's not whether you will lose or not lose the money, but the main problem is that can you withdraw the money when you want to all the time? Now that's a significantly underrated question which people don't take. You have your money with one bank, like you have lakhs and crores of money in just one bank, and you hold just one bank account. That does create a serious trouble. Not now, but in the future, it could. So, one of the fundamental things to go about here is that if you have a significant amount, do spread it across two or three banks. Don't have all your eggs in one basket. It doesn't just apply to share markets, it also applies to your bank deposits. And it's also good to have at least one public sector bank, not the IDBI likes or the Karnataka Bank likes, but the likes of the Punjab National Bank or the State Bank of India, knowing that those banks are safe at least for the next decade or so, right?
Definitely. I mean, after Yes Bank, after PMC, and now LVB, I think people, will do some research. Like, just check a few ratios, the CASA ratios and the capital adequacy. I'm not saying go deep into the books, but just check what is the liquidity of the bank. It's very easily available on Google, on Money Control, and you can just do some research before you put your money in the bank. So I think it's very important, like you said, to not put all your eggs in one basket, diversify. I think people have never thought of banks in this way before, but banks are not risk free. There is some sort of risk when you put your money in a fixed deposit or in a, it's in a savings account. It's not risk free. So do take that in mind. And, that's it for today's show. Sankesh, thank you for coming on, buddy. It was great having you.
Thank you, sir. I'm grateful for being here. Thanks.
And I hope that I can have you for more shows on banking and on other topics as well. So let's be in touch.
Will be said forever.
Definitely. All right, guys, that does it for today's edition of Bazaar. People on the show may have certain recommendations to buy or sell, but don't buy or sell based on what you hear. Do your own research before you take any investing decision, and also do your research when you are putting money in a bank. So that's it for today, and we'll see you next week.